Hello again, everyone. This is Joe Hentges with Beyond the Chart. In this technical analysis of the stock market video, we're going to take a look at the Dow again on a daily and weekly chart, check in on our key ETFs, and then take a look at Under Armour this week. So stay tuned. Okay, let's start off here with the Dow, and here's the daily chart. You could see what happened yesterday. It was down 35 points, but this consolidation compression just continues this week, and that's why this weekly trading range is extremely tight. Now, we continue to be in this ending diagonal pattern, I believe within the fifth minor wave up, and as we always know that in ending diagonals like this, and in any Elliott wave impulse pattern, wave 3 can never be the shortest wave. So it's already shorter than wave 1, so that means wave 5 has to be shorter than wave 3. So when we do the math, this is the maximum that we can expect for the Dow Industrials on this move, and if it were to exceed that, or do a couple other weird little minor nuances, but primarily if it were to exceed that, then this entire scenario changes. But right now, this is the most accurate picture that we've got of what's going on with the Dow. And what's interesting is this same kind of pattern is showing up with the S&P 500, now with the NASDAQ. So those three major indices are all showing the same type of ending pattern. Let's take a look at this on a weekly basis. And you can see here's the compression for this week. Okay, very, very compressed. Now, either this is a kind of an ending doji candle, the end of a move. A lot of times it shows up like that, or it's simply a pause. And we're not going to know till next week and maybe the next couple of weeks. Now, I'll tell you what I'm looking for or watching out for, let's put it that way. If we were to get a bearish candle down, a dark bearish type candle like this here or like this here next week, okay, then this could turn into what we call an evening star and would be a reversal type pattern. That's just one thing I'm on the alert for. All right, let's take a look at the semiconductors. The semiconductors came back. They continued to move up from the previous week, and they were actually up 1.77 points this week. I do think that this is the fifth move and the final move for these guys, and they're continuing to trend up nicely right now. They haven't broken down. Notice how we got one close below the 10-week moving average, but we didn't get any continuation to the downside. Didn't get a second week, and it just didn't get any kind of rollover at all. So right now, these guys still continue short-term to trend to the high side. Home builders have bounced back, but I can't really get too excited about these guys. They've been very, very, very weak for many months. Went to a lower low in here. This could be nothing more than just a simple little snapback. So, and they're not even close to pushing to new all-time highs on the home builders. Now, the financials, on the other hand, are super strong, as we all know. We've been watching the banks and XLF just go skyrocketing last 2 weeks, and this has pushed to new all-time highs. So now I've got 2 out of the 3 really kind of key economic ETFs, the semiconductors for productivity and technology, the financials, and the home builders for the home building industry, which is kind of the backbone of the economy also. So 2 out of the 3 are still pushing higher in terms of high trends. So we're just not seeing a total breakdown there, at least not as of yet. All right, so those are the 3 that we're watching. And I wanted to show you one other one on the banking index. Okay, so here's a daily shot of the PowerShares KWB Bank ETF, and this has gotten to an extreme. Look how it's riding outside my Keltner channels. This is a 10 exponential, 21-day simple, 55-day simple, okay? It's trending nicely. It's gotten to an extreme. Now, one of the things I've pointed out to my insider members is look at the directional movement indicators, DI plus, DI minus, and then this very light line in here is the ADX, which is the average directional index. So whenever DI plus or DI minus gets in the extreme, usually like above 45 or even like right here, I've tagged it around 50, It has a tendency to indicate that that's the end of the move. Either we're about to collapse or go into sideways movement, but the major thrust has pretty much used up all its power. If you look right here, like on DI minus, the selling pretty much stopped when it got up into that territory. Now here it got close but continued to trend down. Nothing is for certain. I'm just looking for some kind of indicator that works most of the time. Here we got above 50, and the selling had pretty much shot all its ammo, and it kind of drifted sideways for the next several weeks. Here on the buying got above 50, and that was about all she wrote. So it happens time after time after time. So right now, I have a tendency to believe this is probably not the best time to be buying KBW Bank ETF. All right, so that's the picture on that. Let's take a look at Under Armour. And here's Under Armour on the daily chart. You can see the big downdraft move that happened yesterday. Supposedly there was some negative comments about the new Steph Curry shoes or something like that. I don't know. I don't follow news like that. All the news is reflected right here in the stock chart. That's all I need to know. This stock has been in a downtrend for quite a while. And in my blog post today, I talk about Under Armour. I talk about how they basically quit selling my favorite T-shirt, which is very frustrating to me. And I kind of tell that little story on the website. And then we talk about previous posts where I've reflected in my negativity on Under Armour. And so right now it continues to trend to the downside. It has gotten to an extreme. We may have just done a little consolidation to the back, pullback here. Look at this downward trending 21-day moving average. It is just down at a very steep angle. That's pretty strong momentum. Now we look at this on a weekly chart, and this is the picture on the weekly chart. It's broken a long-term upward trend line. It's broken a more intermediate term trend line the last 2 to 3 years in here. Pretty sharp breakdown. I talk about in my post how I put out a video at the end of May and said, Under Armour, look out below, and called for major negative move down here. Actually, I said the potential was to get all the way down into this extended wave 5 correction zone, because this is an extended wave 5, intermediate wave 5. Now, my minimum expected is back down into this previous fourth wave right here of the previous 5-wave sequence. That's my minimum expected, which is down 23 to 24 range territory. But I think there's a good chance it's going to go a lot lower than that. And let's zoom out and show you the entire picture. Here's the move that it's happened. I mean, it's had. This is a big move, and I talked about it in the previous videos. So right now, that's the picture on Under Armour, and I don't think it's very pretty right now, and I think the trend is going to continue to the downside. Do you get down every week? No, nothing goes down every week. Everything goes down, then it pulls back, then it goes down, pulls back, consolidates, compresses, and then expands. Okay, right now we seem to be compressing a little bit after a huge expansion. Okay, so that's the picture on Under Armour. If you found this helpful, please hit the like button and share the video on the internet, social media, etc., Twitter. And if you're not watching this on my website, head on over to the website, check out the post I wrote today and the other posts and things I've got for you. Everyone, have a great weekend. We'll talk to you on the next video.